I'm currently joined by Michael Wickens, who's Professor of Economics at the University of York, with a very large experience in economics, if you don't mind me saying. So, how did you just find the debate, Michael?
I thought it was a bit surprising to me in a way because it was the topic was about the future of the finance industry, and much of the discussion was really about how we got to where we are now, and because the individuals had their own perspective on finance, and that made it interesting because they came at the problems from different angles. And I thought the discussion on ethics and regulation was sort of unusual in a finance conference because usually the focus is more on the technical issues of finance rather than the regulation side of it. So that was an interesting dimension, I thought.
That is a very interesting point to mention. I was joined by Rebecca Dudson not so long ago, who was in the debate, and asked her a question, which I think I'll repeat to you actually, which is largely that banks and large organisations, ranging from European Central Bank to just smaller local businesses, expectations and confidence for them play as large a role in the international economy as they do in the businesses. So why do you believe, if you have an opinion on the matter, that why can't they deal with these issues themselves, with it being so beneficial to them?
Well, of course, it's got to be demonstrated that it's in their interest to follow these rules, because what we've seen is that certain players in individual industries have acted as though it's not in the interest of the bank or the company to behave in an ethical way. So I guess first of all you've got to persuade people that it is in their interest to do this. Then the next a point I was thinking about and I made in the discussion was that finance is primarily about how to deal with risk and uncertainty, and of course regulation is a way of avoiding risk and uncertainty. It's a way of trying to cleanse the system of risk and uncertainty, and yet the whole point of finance is that it's built on how to handle risk and uncertainty. So I think there's an interesting irony in that somewhere.
So, in terms of, you have, as well as macroeconomics, microeconomics as well has been a focus of yours.
Mm-hmm.
So this bubbles down ultimately to the firm. Regulation, obviously, is a much larger government-focused kind of topic. So would you say regulation or private interest would be the most forward-pushing matter in making firms essentially responsible for their own affairs?
Well, it's a very difficult decision, isn't it? Because on the one hand, you want profits. It's a capitalist economy. You want people to make profits. It creates jobs. It causes the economy to grow. On the other hand, you want people not to be to suffer from failures of banks. I think if you look at the financial crisis, it wasn't really due to unethical behaviour. I think it was more to do with a failure to understand the risks that were involved. And a lot of people are concerned that with the avalanche of regulation that's taken place more recently, it will inhibit the finance industry, and it will inhibit growth. So, yes, of course, you don't want people to rig financial markets. You don't want them to quote prices that are not true. You don't want them to suppress information to avoid allowing people to acquire the right information about asset prices. But on the other hand, you want to organise this in such a way that it doesn't constrain what would otherwise make sense. So it's a very difficult balancing act. And I know that because I advise the House of Lords Economic Affairs Committee, there's a lot of discussion on these committees about the trade-off between regulation on the one hand and the freedom of financial agents to do what's not only in their best interest but ultimately through them in the interest of the economy. So it's a very difficult balancing act, I think.
I agree with you. And in 2008, the Lehman Brothers crash required a $500 billion bailout, essentially, from the Fed. Do you think there is any room left in banking, other than for the major international organisations? Is there any room in banking and in the financial sector as a whole for nationalisation? Sorry.
Well, no, I don't think so. There's an interesting question. You have to ask, to what extent can the state run business better than the private sector? And most of the people in government are not trained to do these things. They're not really trained to run trains. They're not trained to run banks. And I think banks are better run by people who are trained to run banks. So no, I think that I think it's better for these things to be run by the private sector. And the question really is, when things go badly, who should pick up the pieces? Should it be the taxpayer, who otherwise benefits from the growth that banks have provided, and bail out the banks, or should it be the owners of the banks who get all the profits when things are going well? So this is an interesting, difficult dilemma. So when regulators are thinking about how to proceed, they have to sort of trade off these type of concerns.
One more point I'd probably throw into it, going back to the idea of confidence before, and we've just talked about the amount of regulation, whether it should be government, the kind of balance between private sector and public sector. And something that really interests me is the whole media element of it. Do you think that the banks are far more subject now, after the whole media coverage of the financial collapse, to what extent, and it's probably quite a specific question, but to what extent would you say that they have had to change as a result of the public image, as a result not only of what has been forced upon them by governments, because of course they've had crashes and problems in the past without the governments intervening necessarily. To what extent has it been the public demand that has changed things?
I think it has. Clearly, the failure of the banking system, the scandals that have been revealed recently, they all give a very, very poor impression to the public of what's going on in the banking system. And I can't believe it's in the interest of the banking system to do these things. To what extent regulation is going to solve the problem, as opposed to public opinion simply being highly critical of the behaviour of these banks, is another question. I'd have thought that a simple exposure to the public of what's going on is the most important sanction that you can have. The regulation and the paying the fines, I think that's window dressing. I think really what you need to do is for the public to know that a particular bank has behaved in a bad way, and people will withdraw their savings. They won't go there. This will hurt the bank far more, I think, than a fine.
So to finish off, essentially, would you say it's almost a problem of information failure? It's a problem of the public not knowing what's going on. Is that the main area that needs to be addressed in the near future?
I think it's always the case that the more the public know, the more information people have, the better they're able to make their decisions. So I think in general that's a good thing. You know, one of the reasons for the financial crash in the first place was that people didn't know that about the subprime market. They didn't know that building societies in America were willing to lend on such a slender basis. They didn't know that there was a big chance that people wouldn't be able to pay the mortgages that they had taken out. That lack of knowledge, not only did people in general not know, it seemed that most of the finance industry didn't know either. So I'm certainly a great believer in the more information that's out there that people have and can act upon, the better the financial system will operate.
That's brilliant. Thank you very much for joining me.